Definitely bullish this year. I think Bitcoin is going to hit the all-time high of 70,000 by the end of the year. My put position was just like a cheeky short position. I thought, you know what? I think that the Fed isn't going to renew the bank term funding program. There might be some banking stress. Bitcoin did swoon a bit in March 2023 when the bank started going under. Maybe it'll be a little bit similar this time. I thought it would break 40,000. It did. It only went down to 38 something. Didn't really continue going. And you know what? I assessed the market. I was like, not really doing what I wanted to do. And the option theta is killing me. I'm just going to close these things. And, Bitcoin is on its way back up. So, I mean, I'm long as fuck anyways. It doesn't really matter at the end of the day. This is just trying to make some extra shekels.
Arthur Hayes, the former CEO and co-founder of crypto exchange BitMEX, predicts Bitcoin will hit a new all-time high of $1 million in no distant future. Last Monday, Arthur took to his Twitter account to share a price chart for troubled New York Community Bancorp with the caption, "Resume the dump." Arthur noted that Fed Chair Jerome Powell's recent statement that the U.S. economy and banks are strong is overly optimistic, considering the state of banks like the NYCB. His tweet reads, "Who is right, the market or the central banker? Time and compounding interest are two things even neo-Keynesians can't wish away. The bailout is coming. Bitcoin is going to $1 million per coin." During a recent interview with Crypto Banter, Arthur discusses the possibility of another widespread banking sector crisis in the United States, starting with the collapse of NYCB. He talks about the end of the bank term funding program in March and how it's going to negatively impact the entire banking sector. Arthur explains that the program was created last year to address the issue of underwater securities. However, banks now also have to struggle with the worsening commercial real estate crisis, which threatens to cause an even bigger crisis than last year's. We will now bring you clips from Arthur's interview as he discusses the possibility of an impending crisis and how assets like Bitcoin and other cryptocurrencies will perform during the crisis. For more videos like this, please subscribe to the channel, turn on post notifications, and give this video a thumbs up. Thanks, and enjoy the video.
As we've seen, right, the banking system in the US is fucked, and the banks are all insolvent if you actually use real accounting, not this fugazi shit that they let them do. They're all insolvent. But that's not good because the game of the Fed and the Treasury is to keep the system afloat. And so they make up rules so these guys can look like they're actually still solvent institutions, but they're not. But at the end of the day, they don't want to print all this money to save them. They want to put in place a backstop that never gets used, right? Carry a big stick, but don't use it. That's the name of the game. And, if you're a con man like Jay Powell, right? You're a confidence man. You need people to be confident that the central bank has your back, but you don't actually want to have to do anything because you actually had to print all the money. That wouldn't really be good because then you get inflation. And, we've seen that story before. And, that's not good for Joe Biden's re-election probabilities if inflation is surging. So they don't want to print the money, but they also need to save the banking system. So it's kind of like, what do we do? Well, we have to talk this big game about how safe the banks are. And one of those things is, well, you put in place this thing called the Bank Term Funding Program, or BTFP, back in March of last year. You're getting on 60 Minutes and telling us the banking system is strong. So then why would you have this program, Jay? Is if the banks are strong. And of course, of course the banks are strong. We don't need this program anymore. And, he went on 60 Minutes a few weeks, I think it was last week. And he said, yeah, maybe there's some small banks that might have an issue. But at the end of the day, the entire system is sound. Okay, maybe, probably not. But so they take this program away. And this program basically allowed banks to refinance their assets at a very favorable rate and get them a very favorable price for the collateral. That's going away. But that's not really the real problem now, right? The market changes. It's never the same playbook. The playbook changes. So March of 23, it was underwater treasury and mortgage-backed securities. And they fixed that with a bank term funding program. This time, it's commercial real estate. Now, even if the bank term funding program was extended, if you have a commercial real estate loan, the Fed is not going to take that as collateral. They don't want that. They want treasury bonds. They want you to buy government debt and keep the U.S. government solvent, not buy office buildings and lend to them. But that's what these banks have. New York Community Bank, which is the one that's down, 60-something% over the last week and a half. They have commercial real estate loans. It's not like they can go to the Fed or the discount window and say, here are these bonds on these buildings that I underwrote. they're down in price. I can't sell them, but I need to make good on these deposit outflows. Please, can I have some fresh dollars, Jay? The answer is right now is no. You can't have any dollars, and that's why the bank is getting crushed.
Are you saying that this is a different problem and it's linked to commercial loans?
Yeah, so they had two large loans based on multifamily residential properties and an office building, and they increased their loan loss reserves 10x in their fourth quarter filing that they just released. And they had to cancel their dividend, and they had a loss, and all these really, really bad things. And the issue is that, okay, I have a building that was marked at 100, and now maybe I get 80 for it, or 670 or 60, or I don't know where the fuck I get with this building, because nobody wants to buy these things anymore. I have to work from home. So what do I do with these loans? Well, I have to reserve against the possibility of a loss, and the recognition that these assets are not worth what I said they were worth 3 months ago is what the market's like, well, holy fuck. If New York Community Bank, they're just a small bank, who gives a fuck if they go bankrupt, right? If they've got these commercial real estate loans, and it's not like they can go to the discount window or get money from the BTFP, they're just kind of fucked. And so that's why, like, why do I want to own the equity in this bank if, you know, they've got all these loans and they can't go to the government and get financing for them?
With the impending crisis, Arthur warns that it is almost certain that the Federal Reserve will announce another funding program to bail out banks, especially if a bigger bank is threatened. During his discussion with Ran, the former BitMEX CEO gives two different examples of the Fed coming to the rescue of the banks, despite previously insisting it wouldn't do so. Arthur notes that the insistence will only last until a bigger bank is affected. In addition, 2024 is an election year in the United States. This means the Fed has to present the facade of a strong economy to incentivize voters. This means rate cuts, rescuing the banks, and even direct handouts to Americans. The former BitMEX CEO further notes that all of these things will be quite favorable for Bitcoin and the overall cryptocurrency space. Here are more clips from the interview.
It's politics, right? You need to let a few banks fail first, right? So if we go back to 2008, first you had the gating of the BNP hedge funds in 2007. Bear Stearns went bankrupt in early 2008. Then Lehman went bankrupt, and then they bailed out everybody else, right? So last time it was, what was it? Silvergate, Silicon Valley Bank, Signature Bank, Credit Suisse, bail out everybody else, right? So what is it this time? I don't know. So it's New York Community Bank. They're gone. They're fucking toast. There's no way they're going to survive. But they're not going to get bailed out. So the question is, who's next? And so my working hypothesis is that they've started bailing out the banking system again when a bank that's not a too big to fail bank, so not a JP Morgan Citibank, because they cannot fail, the government guarantee. They're nationalized banks, essentially. A bank that's just below that threshold that has a large commercial real estate portfolio. I did a bit of, Bloomberg, financial analysis in the 5 minutes before this call. There's a bank called M&T Bank. It's actually from my hometown in Buffalo. They have a very large commercial real estate portfolio. And they're a example of the problem. So I took a 20% loss rate on their commercial real estate loans. That's just listed in their, quarterly filings. You knock that off of their total risk-weighted assets, and then you recompute their tier 1 common equity ratio. And lo and behold, they breach the limits. And so therefore they are insolvent by the regulatory standards and thus need to be recapitalized. So that's just an example of a bank. Now they're a 200 billion asset bank, right? They will not be allowed to fail. So when the problem gets up to that level, then we get a bailout. But New York Community Bank and maybe a few other small banks, they're going to be allowed to fail. No, they need political cover. Something has to fail first. I think that bank bailouts are bad politics. Joe Biden is not going to win against Donald Trump if the election was held today. He has an inflation problem. He has you just print money to bail out the banker problem. They cannot be seen to bail out banks unless there is some massive financial collapse that prompts them to do it. So we need, I don't know if the S&P is actually even going to go down, but we need the treasury market to freak out. We need a large bank that's not large enough to be too big to fail, but almost there. They have a commercial real estate problem. And that's when on a Sunday night, you get the announcement, oh, there's a new program. It's got new alphabet letters, says a bunch of gobbledygook, and then it's just, oh yeah, we're printing money. I think that the risk assets, so your S&P, well, let's call it the Magnificent Seven, the AI tech stocks, the NASDAQ, Bitcoin, even bonds to some extent, right? Everybody knows that if the banking system has a very big problem, the Fed prints money. So as you saw, as New York Community Bank started fucking cratering, 2-year yields started plummeting, right? The bond prices rose. That doesn't make any sense. What is that? The bond market's telling us, oh, there's a problem in the banking system. We know what they do when there's a problem in the banking system. They print money. That means they're going to have to either stop QT, quantitative tightening, maybe even restart quantitative easing, which is just printing money to buy bonds. Therefore, I should be owning bonds. That's what the bond market is telling us every time the market starts to freak out about some bank going under. So I think that we've done this so many times that risk assets might not even go down, because the more stress in the banking system, the more the market knows the Fed has to print money. Therefore, S&P at 5,000, S&P at 5,500, S&P at 6,000, right? It doesn't matter, because I know I'm going to get more printed money if there's a banking system problem. So I think that the market actually continues to go higher. There might be certain stocks like banks that get crushed, and maybe real economy shit that isn't AI that gets crushed because there's no more lending from the commercial banks to real businesses anymore. But anything that's just a proxy for fiat debasement is going to soar. The bond market told us the 2-year fucking plummeted. 2-year plummets on NCB announcing this, these terrible quarterly results. Why? This is on the same day when Powell said, I'm going to keep rates high. I'm not cutting in March. 2-year yield is fucking plummeting. So it tells me the market knows the Fed's fucked. They have to save these banks. Now, it might not be New York Community Bank, but it'll be a larger one that they save. And so the panic is going to be localized into, I think, certain banking names. But AI is going to keep ripping. Crypto is going to keep ripping. Bond prices, yields are going to go down on certain 2-year, 10 years, because everyone knows what they're going to do. They're going to print the money. We're past this whole will they or won't they.
Do you see a scenario?
We know what they're going to do.
A few days ago, Arthur shared a screenshot with a Bloomberg article stating that credit rating agency Moody's has downgraded NYCB's credit grade to junk. Arthur notes that the next stage after a junk rating is bankruptcy for the regional bank, which has been facing significant headwinds in recent times. Arthur's reaction tweet reads, "From junk to bankruptcy, that's the future. And then more money printer go BRRRR, Bitcoin to $1 million. Arthur's summation is that the Fed may print more money to save the banks, which means further currency debasement and more reasons for investors to buy Bitcoin. What are your thoughts on the interview? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.